This is your host Chandrakant Sharma from Night Fintech. Let's discuss the economic news which happened this week and will impact and decide the future course of action. This week, US CPI as well as Indian CPI data was released. The US CPI printed at 4.9% as compared to expectations of 5%. This strengthened the further view of the market participants towards pause in rate hike cycle. The US 10-year yield dipped from 3.52% to 3.38%. On Thursday, April's producer price index reflected a 0.2% increase of wholesale prices on a monthly basis, lower than the 0.3% price rise as expected by the market. German CPI also printed lower at 7.2% for April against previous month figure of 7.4%. Regarding United Kingdom, in its effort to tame the inflation, the Bank of England increased rate of interest by 25 basis points to 4.5%. Bank of England has been continuously raising interest rates since December 2021. As yet, market has not even celebrated the lower CPI fully. The negative news regarding the risk of a US default due to debt ceiling started haunting the market. The US 10-year Treasury yield again jumped to close the week at 3.47%. Night Insights: the US government is having a limit on the amount of money it is authorized to borrow, that is 31.4 trillion or 120% of US GDP at present. The debt ceiling has been increased roughly 80 times since the 1960s. But this time, Republicans have just won the House of Representatives and they are ready for a fight with Democrats in the White House and Senate. The fear of debt problem in US can surge the 10-year yield to 3.54% level, where it may halt and bond prices may get support. Some events of upcoming week that will impact global markets are Chinese industrial production, Eurozone CPI and US building permits. We expect 10-year yield to be in range of 3.33 to 3.54% during the week. Coming to the crude oil market, friends, Brent oil continued to trade near weekly 200-day moving average on basis of factors like US CPI, dollar index, expectations of supply cuts at the next meeting of the OPEC analyzed together called OPEC Plus in June. Night Insights: oil may once again touch support level of $71 per barrel. US debt crisis, recession fear can weigh on the oil prices. As such, we expect Brent to remain in $71 to $80 range till some major event. On currency front, dollar index has formed a strong base at 101 level. It consolidated there for almost 2 months and moved out of consolidated to close the week at 102.70. The dollar can continue its momentum and remain strong against basket of 6 currencies this week also. It can touch 103.70 level. Chinese yuan is trading at 6.96 yuan per US dollar and may get further cues from industrial production data which is due this week. USD INR closed yesterday at 82.18. The INR depreciated during the week due to continuous dollar buying by oil companies and also due to strengthening of dollar index. Adverse global situation can force it towards 82.80 level in just 2 to 3 days. However, RBI intervention can keep pair in comfortable range of 81.80 to 82.80. Now coming to the domestic debt market, the benchmark 7.26% 2033 bond yield closed at 6.99% before release of domestic CPI numbers. This yield level was last seen on 7th of April. Higher than expected cutoffs at Rupees 39,000 crore auction on Friday boosted market sentiments. The consumer inflation numbers released after market hours printed at 18-month low in April as 4.7% against 5.66% in March. At 4.7%, it is the first headline print below the 5% mark since November 2021. The central bank has an inflation target of 4% and a tolerance band of 2 to 6%. The 1-year swap rate settled at 6.59% and 5-year overnight swap rate ended at 6.02%. Night Insights: the lower CPI brought an air of respite for the bond holders. However, The rise in US yields can spoil or reduce the domestic bondholders' celebration. The domestic market is comfortable near or below 7% yield. However, global factors are weighing on the bond prices. On Monday, there is conversion of GOI securities worth Rs 20,000 crore. For upcoming week, we expect 10-year yield to trade in 6.96 to 7.05 range. That's it for the week. See you next week with the new episode from Night Snippets.